Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/WaveTech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you that are already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. As we look back on yesterday, we did see the markets sell off early in the session. They rebounded to go positive and then finished on a slightly negative note at the end of the session. As I mentioned in the live stream yesterday, we did see an outside reversal the day before yesterday. We got a confirmation that the reversal is valid, so the expectation is for at least 2 more sessions of lower prices. I'll go through all the details here in the technicals in a few minutes as we set up the end of this week. As we also look back at the fundamentals that came out yesterday, I had expected to see the continuing claims number come in at around 5.2 million. Well, it came in at 5.7 million. They were up 230,000 rather than dropping about that number that I was expecting. This is actually a negative implication as we go forward and as we roll into the beginning of the year. This is likely to affect the market sentiment in a very negative way, I think, as we start to print in and go through the gyrations that we do every year at the window dressing and all the institutional rebalancing that's going to happen, including we have the Tesla rebalancing coming in as well. Probably one of the most fascinating things that happened yesterday was the Airbnb offering, the IPO. This company had about 1.2 billion in revenues, 281 million in net revenues, and the IPO gets priced at 47 billion. So 38 plus, I didn't look at the exact numbers, but 38 plus times earnings. The valuations that we're seeing in the markets are certainly frothy, and I'm not sure where we can go from here. I do expect to see overall a general grinding as we come to year end. And as I talked about a lot in the live stream yesterday, expectations are for potentially going into a very broad sideways trading range for 2, 3, maybe more months as we come into the beginning of the year, primarily because of the uncertainty of a new administration, taxation, all types of rule changes. Who knows what's going to be dealt with there if this thing moves forward like it looks like it probably will. But as far as the overall patterns go, as far as the economy goes, we're definitely seeing softening. The shutdowns that we've seen in certain areas of the country, especially in California, could have material effects as we go forward in the next several weeks. And the jawboning just continues when it comes to stimulus. It's actually a ridiculous environment that we're seeing in the government, because they're really not trying to make any moves to help the American people. It's very obvious there. I think actually Nancy Pelosi was quoted as saying, well, she's more willing to look at doing a deal now that we have a new president. That kind of is revealing in itself. And as I've been saying all along, that there was no way coming into the election and even now that they're going to have anything done while Trump is on the clock. It's just the way it's going to be. So this thing will continue. We've got a lot of deadlines coming in on 12/31. So there'll be emergencies. Who knows what's going to come out of this? These guys, if these folks go on break without passing something, then that's going to tell you literally everything you need to know. It's scary times that we live in from the standpoint of our government and just functionality of everything right now. It's just very up in the air. At least it feels that way. I know many folks that I've talked to on a regular basis feel that way. But as we look at the markets and the close of this week, this is going to be interesting, because if we get further downside today and we close below some numbers that I'll talk about in the technicals in a few minutes, that's going to set the tone for more liquidation coming into next week. Also, I'll go through the database in a few minutes. We're still seeing short-term liquidation there. And so we're just setting the end of the week up on a fairly negative note. Now, one of the things that we saw yesterday was the Russell kicked in, is actually almost at an all-time new high again, up 1.1%. The NASDAQ was up 0.5%, and the S&P was only 0.1%. So the S&P was the laggard yesterday. So there's a lot of things going on. Energy continues to be strong. Energy stocks were up 2.9%, and that rotation and the underlying theme continues to go on, along with airlines and other types of things that would indicate that the economy is going to do better, in spite of what I've just talked about in the employment situation and all these other factors. This confirms the probabilities of going into this sideways trading range for multiple months, and it's going to be a very volatile and broad range at that. So let's go ahead and take a look at the charts, see how the end of the week is setting up. As I begin with reviewing the WaveTech database, the short-term database saw again about 870 new sell signals and only 230 buys, so we had a negative rotation. The percent bullish continues to drop. It was at 80% just a few days ago. It's now at 73.5. It's still up there pretty good, but we're seeing that liquidation continue. It will be interesting to see at the end of the close today, if we close lower, how much liquidation we get for Monday's market run. We'll also be running the intermediate models, and it will be interesting to see if we start to see any selling coming in on the intermediate models as well. And that will come out for those of you using WaveTech. You'll know that about 8 o'clock Eastern Standard Time. On Friday night, you'll be able to review the database and see what's happening. But on Sunday night's video, I will go through in detail everything that went on with the rotation and everything that is going to affect the markets from a trend standpoint as we go forward. As I begin with the S&P futures, we're continuing to see it down slightly overnight. We're down about 3 handles. We were down about 7. We're getting a little bit of a rally right now. We're about an hour and a half from the opening on London, so we are seeing some attempt at a recovery here. But the range that we're seeing so far as we look at the market grid is 3652, and S1 is 3650, so we printed an S1 overnight. R1 is 3671, the high has been 3667, so we came close to an S1, R1 so far. Expectations are that R1 will likely be the high of the session, and we will see a move down potentially toward S2, which would push us down to 3638. Now, yesterday's intraday low was 3636, so that'd be a retest of the lows of yesterday, which happened early in the session. If we take that out, then as we go back to the grid for today, you're going to see the potential to go down to 26 and as low as 3615. Now, one of the things that is really critical to understand, there was a lot of coverage on this on the live stream yesterday, is that we're likely to see a continuation of the market move down toward the 3600, maybe as low as 3685, going toward the lower end of the market grid. The 10-week moving average, still looking at the futures here, is at 3520, and that's moving at about 38 handles a week. So that's going to jump up to about 3580 or so. So somewhere around 3600 to 3585 is going to be where this market is likely to bottom. I don't see any huge rollover, especially with the momentum that's on the PPMs on a weekly, plus 0.94, plus 6.65, and a 0.59 on PPM 1, 2, and 3. So these are very bullish, very positive numbers telling us that the trend is very strong. As I go to the S&P cash, the SPX, this is demonstrating that we're likely to continue down on the daily charts toward the 21-period moving average. That's right now 3627. This could be hit today if we get some weakness. As we look at the market grid for today on the SPX, 36.48 is going to be the key number. Yesterday's low was 36.45. So just like in the futures, a move down toward the S2 number will be a retest of yesterday's low. I suspect if we get to that point that we will go to S3, and there's a potential for an STX if we take out that 45 low of yesterday. There should be quite a bit of selling that comes in if that occurs. PPMs are just flat. Same thing with the futures. We're seeing some slight acceleration overnight, but not a lot of downside building right at the moment. As I go to the weekly SPX, we're also looking at S2 as 36.52, so we traded just below S2 on the weeklies. S3 is at 36.27 numbers. That lines up with some of the daily numbers that are coming out right now in the pattern. So that is going to be a key number. You can see STX is 36.05. So that's my expectation as well, that we'll see that. Now the PPMs, just like in the futures, are at 0.91, 0.62, and 0.55. PPM 1, 2, and 3 are very strong. So the underlying trends are very much intact. So we're not looking at any major top to form here, but we are looking at further sideways movement. And talking about that reversal trade, we're only looking at a possibility of 2 more days in that pattern as well, which should take us into these parameters I just discussed. The next market I'm going to cover is the Russell futures. I normally cover the Russell cash, but I wanted to look at the futures tonight and just show you how this thing's setting up in spite of the big reversal move we have yesterday. We're seeing it's flat at the moment. We did have some moderate negative numbers coming out of this market, but the 10-day moving average is the key number, 1878. We're at 1921, so it's quite a bit below there. As we look at the market grid for today, we're looking at S1 is 1910. We printed 1916 overnight, 1929 high. We're basically in between, just like the S&P futures, between S1, R1. I do expect to see the same. And if we do close lower on the Russell, we'll definitely see further declines as we come into next week, going down toward that 10-period moving average. So all of the downside, at least in these indices, appear to be limited at this time. And you notice that PPMs have crossed their first, second derivatives on PPM1. PPM2 has done the same. So momentum is bleeding off here. And even in spite of this reversal, and we're working this higher into the range, there's definitely some bleeding off of the momentum, which is worrisome when it comes into this pattern. On Sunday night, I'll cover the setup as we come into next week. But for now, look for a possibility of a lower close, but even if it doesn't close lower, we're likely to see more dissipation of the upward momentum. The next market I'll cover is the NASDAQ. As I've been discussing, we continue to trade for the last 3 sessions now below the 10-period moving average. That was originally going to be substantial support. The PPM1 is actually starting to turn south here. We're down 27 handles right now. Even though we were up 0.5 yesterday, this really didn't help any momentum build into the market. The pattern that's unfolding is definitely starting to deteriorate, just like with all of these markets. 12,211 is the 21-day moving average. We're right now at 12,373, so I'm expecting to see this thing continue to move toward that 21-period moving average. If we get below 0.15 on PPM2 in this position, then that would set up the potential to go down and test somewhere between the 12,000 level and the potential of going down to the 40, which is around 11,720 or so. Looking at the weekly setup on the NASDAQ, we're seeing a reversal pattern. We made an all-time new high, and now we're seeing the potential to close lower. But once again, all the PPMs are very positive. Points up, PPM1, 0.96, 0.73, 0.95, PPM1, 2, and 3. Anything over 0.25 is a uptrend, so we're looking at 2 and 3 times that number. So that underlying trend is going to continue to be very strong, and the 10-week moving average will be the primary indicator, which it's at right now. It's at 11,929. That's going to bump up about 100 points, so we're going to be right at that 12,000 and change, 12,010. So that's going to be your support coming into next week. So the situation that we're seeing on the weakness right now is a very short-term weakness. So we're going to come into the support levels, and depending on how this thing sets up tomorrow, hopefully I'll be able to see the setup and determine what's likely to happen in the beginning of next week on Sunday night's video. The final market that I'll cover tonight is gold. Gold is actually acting pretty well. The PPM1 is just rocketing right now. It's actually at 0.28, which is in trend level. 1837 is the 10-day moving average, and this is going to supply a substantial amount of support right here. And if we are able to close above 1848 today, this would also start to push the PPM2 into a positive territory. And as I've been discussing on gold, I think there's a bottoming pattern. I want to draw in something that I think is going to be something to watch very closely, and I'll lay out a couple things that I think I'm finally starting to see here. So we're looking at the potential of some sort of pattern potentially setting up to rally above these moving averages, and I'll look, when we go through the weekly charts, you'll see this set up even further. But PPM1, all of these PPMs are starting a little more strength, and we'll see the bottom PPM3 actually start to kick in. But this is setting up a potential pattern here that will suggest that we will go back into this Fibonacci grid here and get up to maybe back into the 1920, 1960 level, which goes back to test this little reversal high that we had at that stage. There's a fair amount to go before that we do that. We're going to have to take out this high over here, and once that's taken out at around the 1888 level, then we would have this pattern set and we'd see it further set up. So today's action will be key. Close over 21-day moving average is going to set this thing up at the next level. So as we review the weekly chart, what we're going to see here is this 40-week moving average, which has an upward slope of 0.1485. So basically at 0.15, it's at the critical level. If we can remain above that today on the close, that is at 1839, we're trading 38.80, so right at that level. So a little strength as we come into the close today will be enough to get this pattern to set up. And these same numbers, 1830, 1860s, 1820, there's a cluster of numbers right in that range. That is where we're likely to start to set the tone here. And we still need to see these PPMs on a weekly basis turn up. And that's going to take a close over that 1888 number to kick that in. So we're going to see this trade first on the daily chart set up, and then it should rotate into an intermediate trade. And that's what I'm watching right now on gold. This will complete the video for tonight. Thank you so much for watching. Thanks again for another great week here at the Kendall Report, and we will talk to you on Sunday night. Have a great weekend, everyone.